All right. Well, we'll answer Assyrian's question. I think it's fantastic, Assyrian. I think it is probably one of the best psychology books you could read. Probably top 3. I think that one, The Best Loser Wins, or the one by Tom something. So a mental game of trading, and then The Best Loser Wins, and then maybe a Mark Douglas book. Mark Douglas is also fantastic. What's the Mark Douglas with the green cover? You know what I'm talking about? Yeah, Best Loser Wins, Mental Game of Trading, and then the Mark Douglas his biggest book, whatever he has. That's the top 3 books I would say to pick up. Mark Douglas has fantastic psychology stuff. So, going into today, let's look at the price action, what I was expecting or what I was not expecting, I guess, and what we got as a result. Trading in the zone. Thank you. Yep. So we'll start on the weekly. Let me clear this out. Whoops. There we go. All right. So for the weekly perspective, obviously you're trying to frame every single week. We're going to do this kind of quick. So I'll record it. If you want to come back and watch it, you can. But every single week is always framed on 2 different things. I have market truths that I'm framing on, right? One is MMXM. You know, everything is going to be an MMXM. That's one. Second is going to be it's an open high low close, open low high close, open low high close. One of those 2, and then it's going to either go from ERL to IRL or IRL to ERL. Always going to be framing my daily bias around those kind of corner, like the pillars of my trading. So when I see the earlier in the week, we have a weekly sell side pool that's ran out. My immediate thought goes to a weekly imbalance, right? Weekly ERL back to IRL. Now, anytime you're trading that, it's going to be slightly harder than trading back into from an IRL to an ERL. But in this case, we're sweeping external range liquidity, going back to internal range. What do we know as our internal range liquidity pools? Well, you have an inefficiency. That's the main one. Wicks are also inefficient. Sometimes, if you're using the same time frame that weekly sell side is ran out on, you have to go to the time frame that's paired. So in this case, the weekly time frame is paired with the 4-hour chart. So if I see a weekly sell side tagged, if I don't see a weekly inefficiency, it's going to dig up into. So this is a reclaimed gap. It could come back into here. If I don't see that, then I'm instantly going to the 4-hour. Okay, so as we go to the 4-hour chart, what do we see in here? A dealing range between the high and the low. You also could be using this dealing range here from the previous week, from high to low. And you've got this inefficiency. Lines up slightly in premium, right, on the 4-hour chart. So when I'm seeing that, we're tagging into it. Obviously, I'd potentially be going bearish into this sell side going to the rest of the week. But that was my weekly draw on Tuesday, I believe, or Monday. Tuesday. If you go to the daily bias section, this was basically my weekly bias. I don't know how clear it's going to be, but if I pull it up, I can't really see. But there's a blue line there, brief blue line. That was the draw for my week yesterday. And obviously, we have some earnings reports coming out, or Trump is speaking or something, and we're just kind of tanking right now, but post-market anyways doesn't matter too much. Tomorrow, obviously it's NFP protocol, so tomorrow you're not going to be preferably trading anything tomorrow because wow, we are selling off aggressively here. Tariffs? Oh yeah, there you go. RIP swing traders. Yep. Holy cow. How far is this move? My goodness. So I guess this is we may actually see the sell side tag going into today. But anytime you have NFP, the weekly profile can be difficult to read, consolidation reversal. So as we go into the 1-hour chart, obviously the 4-hour. So we dug up into that 4-hour imbalance on Tuesday, created a swing high. I don't know if we had SMT there. Let me just cycle over here and we can just stay on this higher time frame chart. I don't believe we had SMT at those highs. Yeah, it still ran it out there. Let's see if YM, if we had the SMT. Yep. Okay, so you got SMT there. So we had SMT inside of a higher time frame PD array. You can see the highs there. Swung it, tagged it, failed there. Also between Monday and the Tuesday highs, so daily highs SMT inside a higher time frame PD array. All right. Inside the premium. So when I see that, I'm instantly looking for bearish price action. Once we tag that, I'm expecting that that's potentially the weekly high if the weekly draw is met, and we're likely to see lower prices. So as we go into the hourly chart, I'm still trying to frame that as to what we're doing going into the session. Now, anytime you have NFP protocol, your rule is typically Monday to Wednesday AM. You want to find a high probability setup, right? Monday to Wednesday AM is where you kind of look. That's the highest probability portion of the weekly profile. Wednesday PM, it's rough. Thursday is absolutely no trade for me. And then NFP still is going to be slightly difficult, but typically after the NFP news release comes out, 9:30 onwards, you can get a good AM session move. So I'm coming into the day when I wake up of I'm not going to force anything because it's really, if it's not exactly what I'm looking for, it's a medium probability day. So if it's not exactly clear to me as to where we're going, I'm not interested in trading. So like I said, 4-hour gap tagged into plus the SMT between Tuesday and Monday's high. To me, it points to potentially putting the swing high in there. And then coming into the session, put the replay mode on here. This is what I was looking at. Is basically this very weird move lower, right? And if we read the narrative as to what we did coming into the session, dropped into an efficiency, we tagged the short-term lows on the Asian low, swept that. Very nice reversal profile with the candle body closing bullishly, creating SSD and an inefficiency, tags into that. Then we run higher. So I was expecting, potentially coming into the morning without even seeing this price action, we were going to be bullish into that gap. But then obviously with the SMT and stuff, could argue both sides. For me, for it to come back down into this range, I can clearly see, okay, we are potentially bearish into this swing low. But then I'm thinking at this point, why would it be if it just took out this stop? This is very high resistance, right? This swing point is higher. It's not low resistance in the fact it's not relatively equal. It's very high resistance because this morning session already swept out that sell stops and cleared it. And then we started to displace up. So I may be bearish, but it's hard for me to argue a run below here with good price action to really short into that and be confident, okay, it's going to continuously move lower, especially with this weird, if you look at midnight, kind of just opens up and just lethargically trades through this inefficiency and then starts to displace more. So in my mind, it's hard to argue bullish price action coming into this morning, at least for me. So I know that my bias going into this would be bearish, and I'd be looking for the sell side probably on the previous day, although it would be kind of funky, right? Then as we go into the 15-minute, you do have an IRL in here in premium, right? That you potentially could be trading into as a manipulation target and then moving lower, right? And then as we come to the 15-minute chart, when we start to watch what happened, let's skip forward. We're gonna get off replay mode actually. It obviously just shoots up aggressively at 9:30 and closes above that hourly gap. Now that to me, I'm not confident I can flip bias that quickly and feel comfortable targeting this high. Although we have low resistance, it's just the weekly profile in my mind. That's very funky price action. Tag all the way back into the new week opening gap, failed to have any stop run or SMT below these lows, and then it just shoots up into that inefficiency. I know that as I go to a lower time frame, and I'll show you what happens, I'm not going to be able to take a trade on that kind of day. And that's through experience and through knowing how I perform. I can look at the charts with perfect hindsight, not of, oh, this is a missed trade or this is a opportunity that I should have taken. More of, how would I have read this day and feel comfortable trading it? I know that I wouldn't have been able to read this day with high certainty and really be able to take a high probability trade from the low of the session or the low of the day. So as we come into on the 1-minute chart, I'm gonna mark out this inefficiency on the higher time frame. We shoot up into it right at 9:30. So if I had a bearish bias, kind of what I'm looking for, but the fact that we're displacing this quickly into that gap kind of leads me to believe, okay, if we were to move lower, it's going to be high resistance down, but shoots up into that. That would be within my realm of possibilities for an open, high, low close if I was bearish. Respects this inefficiency in premium. This is not, to me, a good trade. There's no breaker. It's not in discount. I wouldn't have flipped bias at this point to be able to take this and confidently say, okay, this is a trade I would have taken. This, to me, I know I would have missed that, and that's fine. Even with the macro time, gap, it trades up, drops back down, and right at 10 a.m., we tag into the bullish order block and also the inefficiency. So inefficiency here, sorry, bullish order block there, and also the inefficiency. That is a little bit better. But for me to, obviously we're trading above that IRL, and with this leg here dropping back into discount right at 10 a.m. and then we're trading back up. So this could be a potential scalp that I maybe would have taken. Swing low, stop loss, moving up to here. But I know as soon as we take out that London high, I'm trailing my stop to that 10 a.m. low. And then I would have been stopped out here. And then it trades back up high, very high resistance back up. But I don't think this is a day, at least from me, from 9:30 to 12 p.m. or 9:30 to 11 o'clock, that I think is, in my mind, high probability, and there's precision in time and price. There's still going to be the elements that you're always looking for. Obviously, it's always going to be doing the same stuff. It's just how well are you able to read it? And when you look at it with hindsight, when you go back in, you're deleting everything off your charts and you're screenshotting it. I'm looking at it with perfect hindsight of how would I, if I was watching this live, been able to respond? And you're not going to be able to know that in the beginning, but as you trade and you see yourself trade and what you're confident in taking, I know this is not something that I would have been able to capture and feel comfortable. Maybe after we had this run on stops and we tag into here and we start to displace again, we have a gap and respect that gap. Maybe I would have went long in here, targeting the Asian high, maybe. But it's still hard for me to argue that, because if I had taken this and got stopped out, I would have been done. If I had not taken this and I saw this drop down, I would have probably looked to, I mean, I wouldn't have taken this, but I'm always looking to trade that second stage. If it's not the macro time or it's not 9:30, anytime after 10:10 to 11:10, I'm looking to trade the second stage of a market maker model. That's it. That's my model for post, these two high probability entries, right? Because the earlier you are on the session, the better the setup. All right. And what you'll find is that a lot of the times between 9:50 and 11:10, you're going to see that second stage of distribution, that entire time window there. I know that every single day, I'm going to find a setup there. I don't care what news it is. I don't care what the profile is. I don't care what the bias is. I know that every single day between 9:50 and 11:10, there's going to be an entry for me, either through the macro here as a low risk buy or as a reversal or as the second stage of distribution. But if I don't get that, then after 10:10 to 11:10, that window of time, I'm looking for that second stage. And there's a combination of different things that I'm specifically looking for. But if you know how the market maker model looks, you can use a bunch of different tools to get an entry within there. So, the lack that there's any inefficiency being traded into here and it expands, or any reaccumulation anywhere inside of this leg, makes it very hard for someone to trust, I think, this entry and feel confident, unless you had a bullish bias going into it. But then I'd be wondering why it didn't manipulate here and take out this sell side, going back into the IRL. And obviously we do displace all the way back up into here, and then the PM session drops and you can see what's going on here after the post market. Very, very difficult PA compared to last week, right? Last week, Monday, Tuesday, Wednesday, Thursday, Friday, I think was easier to read than this. In my mind, the short yesterday back inside the range was valid. I was looking for bearish price action, and then Monday's PA was a little bit better to read than this. So tomorrow, I'm not going to be looking at all, maybe as a market review, but I know it's going to be similar to this, where you can always look at the market and always find a hindsight trade. But would you have been able to confidently execute within your parameters and within your process and your rules, and feel comfortable with either a win or a loss, and feel like that was process based? That outcome that I got was from the process. Okay. So whether you win or lose, if you're not trading the process and trading your rules, that outcome is going to be rewarding you and paying you for something that's kind of dumb, right? PDF knowledge told me is going to go up there. Hey, you already know. So yeah, so it's like on Friday, going the fact that we're just selling off like this, very brief bias, would be targeting that low, and then actually on a weekly time frame, since we already swept the sell side there. By the way, when you're using the current contract, you're going to see kind of these weird price action stuff. So when I'm going to weekly charts, I'll just use the continuous, because then it's a little bit cleaner there. You have this low. You also have 50% of this wick. Both of those are as drawn liquidities. So you're going to be marking out that wick. This wick is inefficient, right? So treat this like a gap. Treat this like a gap. So depending on how far we can close into the gap should tell you how likely we are to reach the sell side. If we're closing below 50%, the sell side is a tag. Your first target within this becomes 25%. If we close below that, 50%. If we close below that, 75%. Close below that, then you have the sell side from August 5th. And these are relatively equal. Then potentially here. But and something that I don't really use that often, but something just to mention is that the yield curve is now, where is the yields? The yields have now, where are the, go to the daily chart. The weekly chart. Anyways, the yields typically are a very early way to tell when there's going to be a recession in the marketplace. When it starts to flip, you're going to see these larger capitulations inside of the inside of the marketplace, and we're going to have actually like yearly recessions sometimes. So I saw it somewhere, but there's a yield flip where basically it's about 4 month pre-fire on the marketplace economic recession. So, and I think we are due for one. The fact that we've been trading up, you know, and how the economy is functioning right now, tariffs, etc. Do not be surprised if the dollar gains value. Okay, and when the dollar is gaining value, what do we expect in the market, in the actual indices? Lower indices prices. So there's nothing wrong with the market. It's not going to affect you in any way. It's not going to, don't think that, oh, the market's going down, everything's going to blow up and crash. Very retail minded logic. Don't think like that. Just think of it as opportunity. I like it better than all-time highs because at least I have some liquidity to target. And I know it's going to be when the market wants to drop, it drops quick, right? And you have these very bearish weeks and bearish. And to me, that's better because I can just go into a week and I'm like, all right, I'm bearish Monday through Friday. And I'm going to keep looking for sells. So that's the way you got to treat the market, you know? Don't try and, exactly, escalator up, elevator down. Yep. So don't try and catch the bottom here. Right? You're not trying to catch the top. You're not trying to catch the bottom. As long as it's pointing to the good rule of thumb, you know, normally for bias is price is going to be continuing until it reverses. So always just trade the trend. If it looks healthy and there's no indication that it wants to reverse, you don't see SMT inside a higher time frame P period. You don't see displacement away from it with SIST. I'm going to still trade in that direction. So in this case, you know, it could be going, you don't know how far it's going to go. You can try and fib project it and stuff, but to me, I don't really care how far it goes. I'm just trying to look at it from a day-to-day basis. So it's going to be weird price action. Probably you could see this huge, like kind of the 2022 correction. If you look at the NQ chart from the 1 year, you know, 2022, what the heck? Go to the 1 month. Right in here, this huge kind of correction. But this is algorithmic, okay? This is algorithmic. You don't believe me? Look at the 1 year chart. Let's go to the 1 year. 12 months, 12 months. You think that's random? That's not. So every single time frame is algorithmic. It's precise. It's doing exactly what it needs to do. You have entire years dropping into yearly gaps and filling them. Okay. What do you think we're doing here potentially on the yearly? Dropping into the bullish order block. Same thing on the monthly. Okay. So every single time frame has precision, even on some of the time frames you don't even look. What do we have in here? Very large monthly dealing range, right? So if this is just a retracement, we're going to attack the first inefficiency in discount. So everyone's going to be freaking out because we drop another 10%, whatever. It could be what, but if you see the same algorithmic precision as to why we want to come back up, then same thing there. So every time frame is fractal, every time frame. So you may have to just zoom out to get a better weekly perspective on. You may have to go to the monthly, you may have to go to the 3 month, and feel comfortable, you know, finding where the bias is, but always being patient and saying, okay, you have to determine what you want from the market. Okay, I'm always demanding I'm not needing anything or demanding it to give me something, but I have my values. Like, you got to look at it like that. Okay, I have very specific things that I'm looking for, and if it doesn't give it to me, I'm sitting out. You're not taking my money today, right? So you have to play defense sometimes. This is, and on a week like this, I'm playing defense. I'm only picking and choosing the shots that I want to take, because if I lose those, I'm comfortable with that. I'm not forcing anything. All right. So when it's this kind of high resistance move up back into an efficiency, it's going to be hard to trade because you have stop runs, you have deep retracements, you have these weird, like this, right? For me to be confidently bullish on this kind of retracement, it's very hard for me to come into the morning and be like, yeah, we're going to be bullish. Unless you're already anticipating it's going to be high resistance move, or we're going to sweep the sell side again and come back up. Very difficult PA, right? And that's fine. So I would rather we just sit out and not even touch it and come in and do a market review and be like, okay, this is what we did, and build a better bias going into Friday. Same thing tomorrow. Tomorrow I'm not looking to trade because I'm more likely to either waste my mental capital or take a loss. I may win. I know there's going to be a setup there. I know there's going to be a setup between 9:15 and 10 and 11:10. I know it's going to be there. I know 9:30 is going to move. I know 9:50 is going to move, but I have no need for I'm not trying to get anything out of it, right? So that's the approach you got to come in with these kind of days and these weeks to really be confident, and don't watch the news. Okay, I know with everything going on, it's very easy for you to get caught up in that kind of stuff. Don't watch it. The market's still going to move the way it needs to move. It's all black swan events. Okay, so while this may be tariffs, that's true, and you're going to have manual intervention occasionally, it still serves a function in our analysis. All right, so as much as it's tempting to look at what's going on in the world and all that kind of stuff, if the sun doesn't come up tomorrow, we got worse problems, right? If the market's not here tomorrow, we got bigger problems. All right, the banks run on this stuff. The world runs this stuff. All right, the Bank of International Settlements is the central bank of central banks. If I get assassinated tomorrow, this is why. The Bank of International Settlements is the bank that runs central banks. It also runs the algorithm. All right, it's based in Switzerland. It runs the algorithm. It owns 95% of the entire global GDP. 95%. All right, 95% of the entire global capital in the world is run on this, right? They approximately in Forex. I don't know if this data is correct anymore, but from last time I checked, the Forex markets do about $4 trillion daily. The futures market is much more than that, but the Forex market alone does $4 trillion daily. So if this market isn't here and something goes wrong, we have much bigger problems because the world is going to end as you know it. All right. So whatever goes on in the news, whatever goes on around the world, I know this market's still going to be here. So me missing a day, me missing a week, it's not a big deal. And it shouldn't be a big deal for you because I know tomorrow the market's going to be there. I don't have to wake up for it. I know that Friday it's going to be there. I know it's going to be there. And if it's not, I have way bigger problems to deal with. So missing a day, skipping a day, do not let one trade be the end all be all of your trading career. You will take hundreds, if not thousands of trades in your career. All right. So skipping a day and choosing to save your mental and physical capital is always the right decision. Okay. You'll never hear me like yell at someone or say if I'm on a one-on-one call and like, yeah, I just wasn't feeling it this day, it just didn't make sense to me and I stepped away. That's the sign of a good trader. Very, very good trader. Someone who's able to identify the conditions that they don't want to participate in and sit out and watch it, and not have FOMO of, oh, I missed that kind of trade. If you're able to get to that level, it's very comforting because you know that what you need from the marketplace, it'll offer it to you. And it'll offer you more than you need. So you just have to take the little bites from it, not get greedy, not get fearful that it's going to leave without you. Don't take more than you need. Don't try and be fearful of it. Just your job is to come in here, take what is given and leave. Yeah, exactly. You're a professional mental athlete, right? So the best, right? What do they do when you're up in a game, whatever game it is, basketball, soccer, football? Do they put the starters in? Are they wasting the talent? Are they going to potentially injure the talent on a game that's not going to be like, if they're already up 50 points, what's the point? So same exact approach here. You're the starter, all right? or you're a coach of your team. You're a professional mental athlete. So I'm not going to try and get injured in a game that doesn't mean anything to me when I know that I'm not going to shine, right? So tomorrow, I'm not going to play. It's not going to hurt me. And you're completely in control of your own decisions. Don't think that the market owns you. Don't think these prop firms own you. You're in control. It may take longer because of that, but that's okay. There's nothing wrong with taking 4 weeks to pass an eval. Don't think you got to pass it in a week or 2 weeks or 3 weeks. If you're going to take 2 months to pass it, then it is what it is. Every single time you try and rush the process, it takes longer, right? You know that. Every single time you're like, all right, I got to pass this eval now or do this or get a funded or a payout here. It takes longer than if you had just sat down and be like, all right, I'm going to give myself 3 months to pass this eval. If I can't pass it in 3 months, then I'm probably doing something wrong. And that gives you enough time to look at the variation of wins and losses and the trades that you take that are good and the times that you mess up. That's okay. You're not going to be perfect. You always have to be aiming and trading to be 99%. You're never going to be 100%. The highest you can ever reach in life is 99% because you never will be perfect. So having that mentality in this kind of market, I came on here not really as a market review, to be completely honest. It was more of like a psychology thing. I just wanted to get it off my chest just to let everyone know, I'm not going to try and force a stream or force a trade on stream that I don't feel comfortable about. And there's reasons behind it. It's not because I want to be lazy and not, I'm protecting myself. And you have to look at it like that as well. And you have the same ability. So the days that are low probability for me, if you went into this, you were confident about a bullish bias, you took a trade within your model, I see nothing wrong with that. So if I don't do something, if I do something and you're not doing, it's flip and flip. If it's within your rules and your heart knows what was right and what was wrong, and you're like, I did a good job today, reward yourself for that. So for me, not taking a trade is something that I did good. It may not have produced any monetary gain, but not taking a trade is my process. And I did what I needed to do today. And I get paid because of that. You get paid to do what you need to do, the decisions you make. So if the decision for me is not to show up, then I get paid off that. It may not be today, but I will get paid, right? Patience pays, but maybe not today. So your patience may not go, it's not going to go unnoticed, but you may not get compensation for it right now. You want everything right now. You want instant gratification. Oh, I didn't trade today. Boom. Tomorrow, because I didn't trade yesterday, I'm going to take a trade. And then that's not how it works. All right. You got to do each individual day, treat them as itself. Are you doing today? So tomorrow, I'm not going to even look at it. Right. And that's the process that'll produce winning as a trader. You're trying to win. You're trying to become a trader, a winning trader, not win trades. Okay. Shift your focus to becoming a winning trader, the person who attracts that kind of lifestyle instead of winning trades. Because the profitable trader is not worried about winning trades. They're worried about showing up and placing themselves in the position to take a trade and take a good trade. All right. So P&L flashes, P&L, all that stuff is great, but it's building a wrong, false narrative that's what really matters. It's not, because you see all those, like JadeCap, doing very well publicly, has posted his screenshots and P&Ls and stuff. I don't be doing that all that often, but you look at his trades, he may be taking these large trades, but you really look at it, he's taking like a 5R trade or a 6R trade, perfectly in the realm of your possibilities. It's just maybe you do it on a lower time frame. I don't swing trade like he does, but I can take the same 6R, 7R trade on a 1 minute time frame because that's what I'm comfortable with. So as you progress, as you learn how your model works, as you learn the variations of when it forms and when you're going to be able to get these large runs, taking a loss, skipping a day is not a big deal because I know on Friday there's going to be either a 9:30 setup or a 9:50 setup, most likely. I don't really want to be trading the silver bullet because a lot of times we consolidate on an 8:30 news day with silver bullet. I could trade the 10:50 macro, but preferably on Friday there's going to be a 9:30 setup or a 9:50 setup. Boom, sauce. I don't have to worry about anything else. I'm not going to trade the NFP. I don't got to trade the 7 to 8:30 silver bullet prior to an 8:30 news day. I don't need to trade the PM session, the lunch session. I don't need to trade the London session. I know when my setup's going to be there. Every single day of the week, every single economic calendar, I can tell you exactly what time my setup's going to be there. From backtesting, from studying, from actually seeing what shows up and what doesn't. And as you study that, that's a really, really powerful tool to have, because then you are confident. You're not overconfident, but you're confident in yourself. If you know exactly when and where your setup's going to be and what it's going to do and what time frame PD rate's going to tag at which time, and then which PD rate's going to go to at which time, and the price and all that stuff, and you are confident in it, you remove a lot of the doubt. And the doubt can creep in as over trading and over leveraging. If you trust your model, the psychology part is really, really easy, right? If you're given, but you have to experience it yourself, right? If I were to give you a 99% win rate model, the 1% losing is still going to blow you up, because you don't understand how to, protect yourself in those kind of situations. So focus on becoming that person where if you had a 99% model, you were able to act properly and be level-headed in both the wins and the losses, right? It's two sides of the same coin. You can't overly be happy about a win. You cannot overly be sad about a loss. It's the same thing, right? It's just kind of a random outcome. After what time did you start to backtest? I never, for me, it was like, the way I backtest is I would go into a day, get a bias, tape read, maybe take a trade. After the day is finished, people who I've worked on with a one-on-one, or or in my private group, anyone who's done this before can vouch for it. If you go in after you take a trade or after you tape read, delete everything off your chart, and then re-annotate it from the higher time frame to the lower time frame of everything that happened perfectly, you will find so much more stuff than if you just tape read it on the day or in back testing. Like, I'm not going to go into a day and then, go back and do all that. You can, but it's, building an ocean and actually studying that stuff. That's where you find all these patterns in time and patterns in price and what days work for you. All those rules. Like for me, like the only way that I figured out, okay, on a 10 a.m. news day, I prefer to let the 10 a.m. news come out. It's because I lost so many times trying to trade before that news. There's times I can take a trade before the 10 a.m. news comes out. When I see something like maybe a 9:30 reversal, clean 9:30 reversal with SMT, etc. I trust that manipulation's already happening. What's going to happen now? Expansion or distribution. So I can get in prior or during the 10 o'clock news and trade that. So it's the same exact thing I did on Friday, right? Friday we had a 9:30 reversal back up into the hourly PD array, tagged it, shifted lower, inefficiency during the macro time. I can take that short and trust that the news is going to do what the news is supposed to do. Now you can see what Lewis said there in the chat. It's a very, very useful tool. And Elijah Pips was the first guy to show me that kind of process. So shout out to him for that idea. But it's a very, very useful thing, because you get super, super good at trading, because you see things. You're basically correcting yourself. You have the answer sheet. You're doing a problem set. You get your problem set. You're doing it right. And then instead of getting the answer, you're looking at how that person got the answer. How did the market actually move on that day? And now you have your problem set sheet, and now you have the answer key. And you are able to compare, okay, this is exactly what happened on this day, and how my model is still there, and how my stop loss placement rules would have worked, how my take profit rules would have worked. And times is so important. You see things that you never would have seen before if you didn't include time. Yep. Started measuring everything as well in hindsight to see what lines up with high day, low day, exactly. So on a day like today, but you gotta, when you're doing that kind of process, it's perfect hindsight. When I say perfect hindsight, I mean, you want to be marking up exactly what happened on that day and what the bias would have been if you had seen it clearly, what the entry should have been if you'd see it clearly. But there's going to be some times where it just doesn't make sense. You're like, yeah, if I was to watch this again live, I still wouldn't have been able to figure this out. What do you do on those kind of days? You can skip it, or you just skip it, or you just look at it like that's a day that's outside of my model, and you feel comfortable skipping it, because every day looks high probability until you take a loss. Every day I can frame a bias. Every day I can frame a trade. It just sometimes there's things that I can't see that will hurt me. The things that it's not going to be precise. So I want to limit those days and figure out, okay, the days that, like a day like today, I know that on a lower time frame, on a 1 minute chart, it's going to be very hard for me to take an execution. Although it moved, how many points? Although it moved 600 points today, I don't think I would have been confident in taking any execution, maybe besides this one. If I gone long there, I know my rules is I would have moved it from here to here, because now that's an intermediate term low. We're filling a gap, taking out a short-term low at a key time. That should not be ran out if we're truly bullish. Would have been stopped out there after the take partial on the London high, which is fine. If I had not taken this trade, I would have waited to see if we were going to reverse off London high at right at 10 a.m. But now that's digging past the opening range, it's a little bit harder to frame. It's going to be short, right? Well, the high of the session preferably is going to be formed between 9:30 and 10 o'clock if you're going to see bearish price action. So I would have probably waited for it to drop down because we're taking a premium array. Premium is now going to seek discount. So your dealing ranges are going to be either between here and here, because this low is child to this low. So this becomes your new dealing range here, or it's going to be this higher time frame dealing range. So if it drops into discount, so in this case, it's referencing the lower time frame discount, and this is what you prefer. You don't want to drop all the way down into here and then come all the way back up. In a best case scenario, you want it to stay in premium, right? Like in discount in print, like this would be in premium of this range, but dropping into discount here. So in this case, it tags a premium array, London high, then it drops down into a discount, respects that. Then we have, what do we have? Inefficiency tags into. I don't know if I would have taken that. Maybe I would have taken this here because respecting this, etc. But as we shift away again, and now we've got an inversion gap, we've got a bullish order block, we've got an inefficiency here, an inefficiency here, tagging into that, I know I probably would have taken that. So that would be something, okay, I could say, but then what do I have to deal with? So mentally, I know this kind of consolidation is going to burn my mental capital, because now I have to trail my stop to here. I can't move my stop. I have to go through all of this basically hour of consolidation before it even hits my next TP. We've got a stop run here. So I already know mentally it's going to be very hard for me to trade this. It's not impossible, but it's going to be difficult. I like when it's like Friday, right? Look at last Friday and how we moved on Friday. We get in and boom, it just moves aggressively. That's the kind of setup I want to be in. Is when I see something like that here, and I get in an entry, there's not really any retracements on me. I can get and trail my stop really tightly and it just flushes. And now it's just respecting the PTers, and I don't have to worry about trailing my stop or my stop being tagged. I'm worried about my limit orders. And that's the best kind of environment you want to be in. The more you can worry about your limit orders filling and not your stop loss, it's much easier to manage a trade. All right. So the less, if you just play on low probability days, you cannot, at least for me, my rules say I cannot trim my stop aggressively, because it's more likely than not we're going to have a stop run or a deep retracement, or I'm not going to be able to correctly identify where to place my stop. So what I do is on a low probability day, I drop my risk slightly if I need to. I'll take the trade if I take the trade, and then I keep my stop loss where it needs to be until I take a partial. If I take a partial, I'll trim it to break even, just as a standard rule of mine. I'll trim it to break even or whatever the closest swing point is that would make logical sense. So on low probability days, you have to accept your risk. And if it's harder for you to accept the full risk, you drop risk in half, 75%, 25%. You take the trade and you keep your stop in the same exact spot the entire time, and you worry about your limit orders filling. So in this case, if I had seen, I can protect my position manually before it tags my stop. So in this case, say for example, my stop loss went here and I got in long off this retracement into this gap and the inversion gap. Went long there, stop loss there. I'm now worried to see, not worried, but my concern in price action is how to react off of this Asian high. If we tag it and we start shifting lower, I'm going to close out in position most likely. But if we run this and we're displacing through, well now, once we're displacing, PD array should hold if our bias is correct. So now we have this inefficiency and a short-term discount. Stop could go there, especially since it's now an intermediate term low. We ran stops, formed a short-term low right there. This now qualifies this as an intermediate term low with high probability because we have displacement. Now it drops into this slightly further into where you want. But that maybe is because there's a volume bounce on the order block. There's not. Okay. It's just a deep retracement. So this entire range is your order block. Still respecting mean threshold of it, but it's a little bit further into the discount of the displacement leg than you want. And then it moves back up into PM session. But that would be my analysis for today. What I'm looking for and how you approach these kind of days in your journal and how you think of them mentally. If you constantly think of these days as missed trades or missed opportunities, you're not going to go far because everything is going to be a missed opportunity. Every single London session you can look at is going to be, oh, I should have taken that trade. So you got to look at it of, would I have been able to read this clearly and how would I have been able to trade this? Not with not with arrogant hindsight, but with perfect hindsight of being true to your own ability, being true to your model and how you have performed within the model. If you had been stopped out here, that kind of stuff. Really important when looking at PA about the end of the day, being honest with yourself about how, yeah, exactly. Right, exactly. Yep. How you'd feel in this exact scenario live. Very, very useful tool. You're being honest with yourself. I'm not going to be able to read this kind of day. And if I were, that's what I would do if I was functioning properly. And don't let the candle sway you, right? So when you see this large expansion move up here, understand how time works. It is being recorded, Lewis. Yep. Understand how time works. Okay. When you have a bias and you see 930 run aggressively, do not be worried. Do not fear. Do not think it's going to leave without you. It's not. If price is doing what it needs to be doing, that's perfectly fine. So when you see a pump up like this, don't immediately try and get into the next one if it breaks your rules. It's not worth it. You wait for time of day. Time of day is important. So when you see this run up here, and then it drops back into discount during the macro time, that you can take a trade there, or here, silver bullet, second stage of distribution, right? You have a stop run into retracement, and then it leaves again. And obviously on the 5 minute, I think there was an inversion hourly gap if you were using that premium array. It retrades into this one here, this premium array on the 5 minute. You can see we do drop into that with the inefficiency. You could take that as a trade too, 10-10. But a little bit harder because it's not in discount, nor is there a clean breaker in here. I would feel comfortable going long off of that. Just my own personal model and my own preferences and price action. So that'll be it for me today. Tomorrow, no stream, no market review either. If you want to go back in and look at it, I suggest you do, just to see with this kind of same logic, would you have been able to spot that and feel comfortable taking a trade on that kind of condition? If the answer is no, which it probably will be tomorrow, you're like, okay, that's a confidence booster because I can skip that day and feel comfortable. Or if there was a model there, then that's great because now my model shows up more than I expected to. So both of those are confidence boosters. The thing you don't want to do is enter into a position on a day you're not supposed to do. Because if you win, you're going to falsely associate that with skill, and it's luck. It's luck. I can randomly click buy or sell anytime throughout the day without any knowledge of ICT concepts and make money if I'm lucky. So don't associate skill with what luck is. So on a day like tomorrow, if you take a trade outside of your model and you get paid for it, you're going to think it's a very nice coping mechanism is getting paid for doing something stupid, right? Oh, it's the only job that'll do that for you. You get paid by doing something you're not supposed to be doing, right? It's like letting your kids run out into the road and then every now and then you get paid because of it. It's not the right thing to do. And only the stupid person is going to let it keep going until they get hurt and they wonder why they got hurt. It doesn't work like that. It's just trading is very weird because it rewards you for doing something you're not supposed to be doing. So the only way you can actually gauge success and failure is by looking at the process. Are you doing what you need to be doing? Because the payment is the same exact payment system as gambling, right? It's a variable behavior reinforcement. One of the strongest reinforcements for behavior is variability. Is you get randomly paid or a random dopamine spike. So instead, look at it as tomorrow's not a day to be looking at that's high probability. ICT says it himself. Tomorrow, the day before NFP is the hardest day for him to trade, and that follows by NFP. He can trade FOMC, he can trade CPI. Those 2 days are the hardest, pre-NFP and NFP itself. So it stands for not for professionals, as he says. So it's best to just not have it any position. If you want to sleep in and that keeps you, obviously this is my model and my approach to it. So if you're you yourself and saying, I actually Flux, I prefer to be trading pre-NFP because I like consolidation profiles and I'm better in trading consolidations than seek and destroy, then so be it. But then you should not be trading on other profiles, right? So it's really up to you, and you got to be honest with yourself of how you want to approach those kind of situations. And everyone's going to be different, and I'm acknowledging that. So maybe it is for you, but it's not for me. So I know what I'm standing on, and I suggest for most people, it's going to be very hard to trade. It's going to be not precision in time, no precision in price, stop runs back and forth, seek and destroy kind of profile. Not fun to be in. Very, very enticing for over trading and over leveraging to creep in. Okay. So the best traders know themselves very well. I'm not going to place myself in a position mentally that I'm going to freak out or want to fix something that doesn't need to be fixed. Okay. So I'll post this recording up on YouTube unlisted. It'll be inside the YouTube vids link. If you got any questions, want to join the private group, pick up the PDF, let me know. Let my admins know, and we'll be happy to help you. So until I talk to you guys on Friday, Lord willing, take care, journal, do the things that are necessary to succeed, and I'll talk to you guys soon. Peace.